Did you know that star investor Cathie Wood has been buying more Tesla stock? While other investors have been having trouble deciding whether to hold or sell their Tesla shares amidst the dip, Wood's firm ARK Invest appears to be stacking up stocks from the EV company. Don't miss this info. Cathie Wood's ARK Invest loaded up on Tesla shares in its Innovation, Next Generation Internet and Autonomous Technology and Robots ETFs several days ago. The company's three funds saw a buying opportunity in the automaker's recent slump on Wall Street. ARK's Innovation ETF bought 27,594 shares in the second week of November, while Next Gen Internet and Autonomous Tech and Robots ETFs gained 2,909 shares and 9,173 shares respectively. Barron's, an American weekly magazine newspaper published by Dow Jones & Company, recently released an article titled "Cathie Wood is buying more Tesla stock and selling some Nvidia." According to the article, Tesla stock is skidding, which aggressive growth investor Cathie Wood sees as an opportunity. Tesla shares dipped over 15% in recent days and nearly 47% in the past year for various reasons. Most recently, the stock's performance has been highly affected by CEO Elon Musk's purchase of social media platform Twitter, which has put many investors in a tough spot determining whether the company is the primary focus of its leader's current endeavors. Still, experts and investors alike have differing opinions about the recent dip in Tesla stock. While ARK continues to buy up shares, others are changing their outlook on Tesla stock, at least in the short term. Managing Director, Equity Research at Wedbush Securities Dan Ives is one of the analysts changing their perspective on Tesla for now. Tesla stock was removed from the firm's best ideas list, as Ives wrote in a note to investors, "Our near-term view of this name is increasingly becoming more challenged. The longer-term bullish view of Tesla remains generally unchanged, as we believe the EV demand and production story are still in the early days of playing out as part of a massive transformation to the auto world." Ives reiterated his $250 price target and an outperform rating on Tesla shares, which closed at below $180 yesterday. Tesla stock has traditionally been met with volatility since the Musk Twitter saga began, and with a majority of his tweets now promoting new ideas for his newest venture, investors are skeptical. Musk has essentially tarnished the Tesla story and stock and is potentially starting to impact the Tesla brand with this ongoing Twitter train wreck disaster, Ives said. Perhaps some of the most piercing words of the note from Ives were that Musk has done what bears have unsuccessfully tried for years: crush Tesla stock by his own doing, what we view as a purely painful, dark situation. Still, Tesla's perma-bulls continue to attach themselves to the company's thesis. ARK remains bullish on Tesla. In fact, Cathie Wood-led ARK Invest bought Tesla shares twice in the past month. Wood's trading has certainly been timely, buying back shares when the stock dipped and selling some off after it rose higher. Wood bought another 66,190 Tesla shares around mid-October on top of the over 132,000 she bought earlier that month. ARK Invest's first purchase in October was made after Tesla reported a miss in deliveries in early October, when Tesla announced its delivery and production numbers through a press release. Wood's latest buy came after the stock fell following Tesla's Q3 report. This alone proves Cathie Wood's bullish stance on Tesla. In light of that, Wood believes that Tesla will go 10x. In an email update to investors, Wood explained that Tesla could expand its addressable market tenfold by cutting the cost of an electric vehicle in half. In a late September statement by ARK Invest CEO Cathie Wood, she said that she is standing by her bullish bets on Tesla. "We stand by all of them," Wood said when asked about her opinion on Tesla, Roku, and Bitcoin. In mid-October, another ARK executive expressed optimism about the leading EV company. During a CNBC's Squawk Box interview, ARK Invest CFA Tasha Keeney shared the reason for ARK's positive stance on Tesla. Keeney said, "Electric vehicles are just single-digit percentage points of overall auto sales, so we have to remember that it's still an early market. But we do definitely see Tesla as one of the market leaders both in electric vehicles and in autonomy." According to ARK CFA, this is because Tesla uses their customers' cars to capture data to train their neural networks. According to Tesla, the neural networks are their bird's-eye view networks that take video from all cameras to output the road layout, static infrastructure, and 3D objects directly in the top-down view. The said networks learn from the most complicated and diverse scenarios in the world, iteratively sourced from our fleet of millions of vehicles in real time. Cathie emphasized that Tesla CEO Elon Musk recently reiterated that they are going to do a wide release of the full self-driving beta software to North American customers. That signals confidence in that platform, which by the way we think is a multi-trillion-dollar market in the next 10 years, says Cathie. In an interview with Yahoo Finance, Wood shared her belief that instead of directing concerns at the fast-emerging EV industry, they should be at the traditional auto industry. We think that gas-powered vehicles are going to be obsolete within the next 5 to 10 years, and the traditional auto industry has to figure out a way to migrate into electric vehicles, explained Wood. According to Wood, there are a lot of innovations in the auto industry that put the traditional auto industry and consequently traditional automakers in harm's way. Wood pointed to Tesla's autonomous taxi platform as an example of such innovative change. In the previously mentioned interview with CNBC, Squawk Box host Joe Kernan also asked ARK Invest CFA Tasha Cathie about the Tesla robotaxi. Cathie shared, they've committed in previous calls to mass manufacturing of a robotaxi-specific vehicle. So I do think it could be that car, and again I think that manufacturing commitment is pretty meaningful because you can promise full autonomy via software all you want. ARK Invest expects Tesla's robotaxi to be a game changer for the company. If Tesla successfully launches robotaxis by 2026, the expected value is the average of all 1 million simulations. Said simulations are highly sensitive to the year when Tesla finally launched robotaxis. In most of ARK's lowest price per share scenarios, Tesla launches a vertically integrated, human-driven ride-hail service, but does not launch a robotaxi network, while in other scenarios, Tesla does not launch either service. While the company is not committed publicly to launching human-driven ride-hail, ARK detailed previously the strategic and tactical advantages of doing so. Importantly, human-driven ride-hail could become a profitable recurring revenue stream before Tesla launches a fully autonomous service. For cases in which Tesla launches a human-driven ride-hail service and solves for fully autonomous driving, ARK assumes that its human-driven ride-hail cars will transition to the autonomous ride-hail network over time. If it is unable to launch a robotaxi service within 5 years, Tesla still could launch a human-driven ride-hail vehicle while trying to solve for full autonomy. On the other hand, in ARK's many higher price per share scenarios, Tesla launches a robotaxi network in the next 2 to 3 years. In a published article, ARK Invest stated that, although tuned to our expectations for 2026, we believe our Tesla model is methodologically conservative. We assume that Tesla's stock will trade like a mature company rather than a high-growth one in 2026. Apart from ARK Invest, other institutional investors are also bullish on Tesla stock. Even Worm Capital's contrarian founder is still bullish on Tesla, according to an article from Institutional Investor, an international business-to-business publisher focused primarily on international finance and publishes premium journalism, newsletters, and research. Worm Capital CEO Arne Alsson said, "Market prices are just not worth getting too worked up over." Worm Capital LLC offers financial services and provides investment advisory and management services to individuals, trusts, estates, and charitable organizations. While institutional investors account for 14.22% of Tesla's share ownership as of early October, retail investors account for 79.85%, and company executives hold 5.93%. That said, most retail investors remain bullish on Tesla stocks too. Tesla purchases are skyrocketing. Retail investors have never been so bullish since summer 20, Vander Research said in a weekly note published in August. Overall, both institutional and retail investors appear to be bullish on Tesla stock, and Cathie Wood and her firm ARK Invest, as always, show their optimism about the EV company's stocks. ARK Invest has a lot of faith in Elon Musk's Tesla venture, so much so that the stock represents a whole 10% of the fund's capitalization. In fact, Tesla stock is one of the top ARK Invest stocks, with a whopping 10.8% weighting in the ARKK ETF portfolio as of late October 2022. Tesla ticks a lot of the boxes when it comes to Cathie Wood's investment philosophy, which explains her bullishness on the EV company. Subscribe to this channel for more Tesla stock content.